Hi everybody and welcome back to Accounting 482. This is session 9, but this slideshow is for sessions 9 and 10. And it's pretty long, so I had to break it up. And this is allocating service costs and estimating full costs. Now, I have to do that again every time. So this is where we are right now. Remember, we looked at basic terms already and we're calculating cost per unit. We've looked at basic methods of um, calculating cost per unit. And then we looked at allocating manufacturing overhead, and we went through plant-wide, departmental, and the ABC method. And now we want to take a look at allocating S&A. S&A can be their sales and administrative costs typically, but they're period costs. So these are not inventoriable costs, but they need to be included in your cost per unit so that you can set a good sales price. So in addition to production costs, most companies have support costs, and these are period costs, but they need to be used to set an appropriate sales price because you have to cover all of your costs. And then you need to also keep them under control. So if you allocate a specific cost to a product, you need to know how much you're spending in those service or support costs. And you're probably looking, thinking, what are support costs? Support costs are departments like HR and accounting and maybe, the sales department. Anything that happens outside of manufacturing that contributes to the business those costs need to be included when you set the sales price of an item because you need to cover those as well. Not only do we need to cover direct materials and direct labor and manufacturing overhead, we need to cover these service costs or support costs so that we can cover all of our costs and still make money. Now, this is especially important for service firms because their direct materials and usually their direct materials costs are so low that they need to take a look at these other costs and make sure that they price their services so that everything is included in that cost so that they cover all of their costs. So we have 4 steps to allocating service costs, and this is for one service department. Most companies have more than one, but we're going to take a look at just one and then we'll work our way up. The first step is to calculate the total cost and total drivers of the support department. And then we need to create a POHR for the department. And this is just like the calculating a POHR for manufacturing overhead. And then we need to apply the support department costs as drivers as they are used by the production departments. Again, we're going to create the POHR and we're going to apply that to the department. And then we want to divide the total allocation by the number of products produced to get the total cost per unit for each production department. So here's our first example. And we have the SCR, and I knew I was going to do that. SCR has one support department, office support. The support staff has a fixed cost of $100,000 a year and spends $20 an hour for office staff. The department uses the number of office staff hours as its cost driver. SCR's office staff work an average of 6,000 hours each year, and the production departments A and B average 1,000 and 3,000 office staff hours each year. So A uses 1,000, B uses 3,000. What single rate should office support charge each production department? Now we want to assume that Department A used 1,500 office staff hours and Department B used 2,800. How much office support overhead would be allocated to each unit produced if Department A made 15,000 units and Department B made 12,000 units? Now that was a lot of information, but of course we're going to go into our example. Now what I've tried this time, I know I keep trying different things, I'm going to do this on a Word document so that I can create lines in the formulas and maybe do some, type a little bit better. And I've made this larger for us so that we can see it. And if you have any issues seeing the videos, just send me an email and I'll see what I can do to help with that, because I'm taping these as we go, so that if you see anything on there that you can't see on the video, just let me know and I'll try to fix it, because I'm trying to do the best I can so that you get the information that you need. So we're going to look at office staff overhead, and look at that, I can make a line under that. I know I wasn't able to do that before. Okay, and Word is easier, I guess. Okay, so we have the total cost formula. Of course, it's going to give me a line because I still have that clicked. The formula to get your total cost is total cost equals the fixed costs plus your variable cost per unit multiplied by the number of units. So that is your formula to get this. Now our total cost equals our fixed cost, which is the $100,000, plus our variable cost, which is $20, right? Multiplied by, and can I bring that up? Am I going to be able to do it? Ah, yes. Okay, so departments A and B average 1,000 and 3,000 office hours each year. So we want to, even though they work an average of 6,000 hours, our departments only average 4,000 hours. Now you can split these up, and you can get the rate for 6,000 and split it all up. But we're just going to go ahead and do the production departments A and B and what they use. So we're going to take all of those that cost and distribute it, because even though we have the $100,000, this variable $20 an hour, that will go into this other department. But the production department is going to absorb all of that full cost, the fixed costs. They're going to absorb all that. So going back here, we're going to go 4,000. So then our total cost equals 100,000 plus 80,000. I do not know why that gave me a line, because I did it different, I guess. There we go. Okay, so total cost equals $180,000. Now, to get our POHR, we're going to go $180,000, which is, I've got my other screen up here too. Of course, I've got it on the wrong side. So now step number 2 is we want to create a POHR for the department. And that's just how we've been doing it before, 180,000. Watch this, I'm going to put a line under there. I know. Take the line off. And we're going to go 4,000. Oh, check that out. And then we can do like a little equal sign right there. Oh, not with a line. Silly thing. Okay. So our POHR for this is going to be $45 an hour. So now that we have our POHR, we can apply it to our jobs. And we have 2 departments. We have A and B. Okay. Now, I know that some of you are thinking, well, how are we allocating this? And I drew a chart here. So you have, this is just for one service department. So I'm not going to even show you that just yet. I'm not going to show it to you. I need to show it to you, but I won't do it just yet, because that'll just mess us up. Okay. So we've got the actual driver. And we have A. How am I going to do this? We have A and we have B. So our actual driver is $1,500 for A and it is $2,800 for B. And this is looking pretty good. This is looking better than, if you hand write it, I can line everything up, but it's a little different doing it this way. So our driver is $45, okay? And it is actually $45 for the other one. I'll put this here, and then we'll do Department A and Department B separately, just so that we can. This is our allocated overhead, support overhead. Support overhead. So you could technically call this your SOHR. Instead of a predetermined overhead rate, we can call it a service overhead rate, and that is fine. You could do that. So I'm going to have to shorten this so I have more room. Support overhead. How about that? Okay, so 1,500 multiplied by 45 is 67,500. And you divide that by the units, okay? Divided by the units produced. And going back to our PowerPoint slide, we had in Department A, they made 15,000 units. 15,000. So that's going to give us our period or service cost per unit of, see, we can do, watch this, we're going to do a line under that. I know, isn't that amazing? And so 67,500 divided by 15,000 is going to give us $4.50. And we need to finish this over here. 2,800 multiplied by $45 is 126,000. And we made how many units here? We made 12,000 units. And we can put a line under that. Fancy. And we got to tab that over. 126,000 divided by 12,000 is going to give us $10.50. So our POHR for Department A is $4.50 a unit, and well, it's our cost per unit. And for Department B, it's $10.50 per unit. So these costs are, they're non-inventoriable. Of course not. And it's still not going to give me inventoriable. Oh my goodness. I don't think that's a correct word, but inventoriable. It's non-inventoriable. So on your balance sheet, you'll have your direct materials, or on your income statement, you'll have your direct materials, your direct labor, and your manufacturing overhead as costs on there. And then you'll have the work in process on your balance sheet, but you won't have these service department costs because they are period costs and they are expensed as you use them. Okay, so the direct materials is direct labor and manufacturing overhead. They go to, how will I put that? We can do it that way. They go to work in process. And those are inventoryable. And that, whoops, I don't want to do that. No line, thank you. I know. I wish I had an overhead and I could just write all this down. It'd be easier and organized. Okay, so your period cost, which are what our service costs are, period costs are expenses. And those are expensed as they're incurred. So just want to let you know and make sure that you know that. So we've got our cost per unit, and now we can continue on. Let me go back to the PowerPoint slide because we need to go on to allocating service department costs for multiple departments. So we're going to take this and we're going to take it one more step. We want to determine the order for the allocation. And there's where my form comes in. Let's go back here. And what we need to do here, I've done this little chart. We've got Service Department 1, Service Department 2, Service Department 3, and Service Department 4. And we've got these 3 production departments. And we need to decide what department helps all the other service departments and the production departments. So what we need to do is this service department will work with that service department, and it will work with this service department, and it will work with, I should have a squiggly line, but I don't have one. I suppose I could use my squiggly line, but I don't think it works. Let's try it. Oh no, see, it doesn't even work. Well, we're just going to leave it there. I don't really like that, but we're going to do it. And then it also services that department, or that production department. It services that, oops, not that one. It services that department. Oh, now it's going to give me a stringy line. That's weird. Oh, stop. My goodness gracious. There we go. Yeah. Okay. And it's going to service that department, that production department. So now this service department has been absorbed into Service Department 2, Service Department 3, Service Department 4, and each production department. Then the Service Department 2 is going to service that production department. Let's make it a different color. I will go that color. Well, that's just annoying. Okay. And then it will service that production department. And then it will service this production department. But it will also service that service department. It will also service that service department. So now these 2 service departments are absorbed into, the first service department is absorbed into these 3 service departments and the production departments, and the second service department is absorbed into these two service departments and each production department, and then it continues on. This service department 3 is absorbed into each production department and the last service department, and then this last service department is absorbed into all of those other production departments. So you need to set this order and decide which order it goes into. So that was, it looks really good when I can draw it, but the arrows are difficult. They really don't like me very much. So back to the PowerPoint. So now we can calculate the percentage of support department cost attributed to all of the other remaining departments. So this, you have to do some math here. Then you allocate the service department cost to all of the remaining departments. You repeat steps 3 and 4 until all of the service costs have been allocated to production departments. And you divide the total allocation by the number of products produced to get the cost per unit for each production department. And of course, this is going to be easier as I show you the example. So ABC Motor Car Manufacturing has 2 service departments, Human Resources and Accounting, and 2 production departments, Cars and Trucks. Management has decided that it makes sense to allocate the human resource costs based on the number of employees and the accounting costs based on budgeted overhead for each department. Assuming that 1,000 cars and 1,200 trucks were completed during the period, how much support department overhead will be allocated to each car and truck? Okay, so we need to take a look at this, and we need to decide what uses what. So, but they have already done that for us. They decide that it makes sense to allocate human resource costs based on the number of employees and accounting costs based on the budgeted overhead for that department, for each department. So you need to have, human resources has to hire the accountants. So human resources will be first. So let's go back to our page here, and now we're at step 2, because in step 1, I'm going to move this one over here, because we've already determined the allocation. HR is first because you have to have HR to hire the accountants. Okay, so our total cost for HR and according to our chart, let's take a look at our chart. Human resources is $1 million. Accounting is $627,500. Cars is 1.8 million. Trucks is 1.2 million. And the number of employees, 30 in human resources, 100 in accounting, 270 in cars, and 630 in trucks. So now that we have our numbers, HR, the total cost here, no line, thank you, it's $1 million. And accounting, we're going to put a line here, and then it's going to try to give me a line every time. Accounting is 627,500. 627,500. So the total drivers, in accounting is 100 because that's the employees that they have. Cars is 270, and trucks is 630. And our estimated drivers is 1,000. Because 100, 270, and 630, I can put a line under that so we can know that that's added up, is 1,000. Now, we have to do HR. We have to allocate HR before we can allocate accounting. So, for step 3, we need to figure out the percentage of use by each department. Move that up just a little bit. Hopefully we can see everything. So accounting and cars and trucks. Okay, so if accounting has 100 and the total drivers are 1,000, it would be 10%, right? 10%. So this is divided by 10. Gives you 10%. 270 or 1,000 divided by 270 is 27%. Pretty simple there. And trucks is going to give us 63%. And this will equal 100%. Okay. So, am I going to have to go to the next page? I am. Now I'm going to go down to step 3. This is step 4. We want to allocate the costs. For HR, it's $1 million, right? And accounting, I'm going to tab these over so that it looks better. Accounting is 10% of this 1 million. So it is, I'm going to tab it over one more time just so it looks better. Is $100,000. And cars is 270,000, 27% of that 1 million. And trucks are 63% or $63,000. $630,000. Sorry about that. Okay, so this $100,000 needs to be brought up here and added to accounting. So you're going to have a total of $727,500 for accounting to allocate, because this 100,000 needs to be HR. Accounting uses $100,000 of the HR allocated costs, or the overhead costs. So that needs to be brought up here and added to the accounting service costs that are already there. So now you have $727,500. So now we need to go back and allocate these drivers to accounting. So you don't, the accounting has already been allocated, the number of drivers for HR. The HR costs for accounting have already been included right here. So now the trucks is 1.8 million, right? And we can go back to the PowerPoint and I can show you that the budgeted overhead for cars is 1.8 million and trucks is 1.2 million, because accounting costs are based on budgeted overhead for each department. So the human resources has been, this 1 million has been allocated to all the departments, and now the accounting hours are going to be allocated to these other departments. So it's 1.8 million for cars. Whoops. No line yet. I lied. I'm going to take the line because we're going to 2 million here, 1.2 million. And so the estimated drivers is 3 million. And we need that to come up with the percentage, right? Whoops. Get back. Oh, nope. That's not what I want right there. So if we have 3 million as a total driver, what percentage is 1.8 million of that? And we're going to get, if you do the math here, you're going to get 60% for cars and 40% for trucks. And that is also going to equal 100%. So, coming down here, we're going to have, we don't allocate accounting to accounting. We're going to allocate 60% of this amount to cars. And that is going to be 436,500. And we're going to allocate 40% of the accounting costs to trucks. And that's going to be $291,000. So we're going to underline this, and this equals 1 million right here. You want to make sure these actually equal your amounts, because if you don't allocate all of your money, then it's your service overhead is not going to be fully allocated to your departments. So now for step 5, I'm going to have to tab over here. Step 5 is to add up your service costs for these departments. So I guess we'll start with accounting. Nope. Accounting has already been allocated to these. So for cars, our total here is, put the $sign, 706,500. And trucks is $921,000. So our total is going to be $1,627,500. And if you look back up here, $1,627,500 is your total service department overhead. and you have totaled those right here. And these are your service department overhead. Repeat steps 3 and 4 until all support costs have been allocated to the production departments. This is your allocated amount to the production department. Now step 6, we'll go down here. Step 6 is divide the total allocation by the number of products produced. So this is going to give us our cost per unit. So for cars, we have $706,500. I'm going to tab that over so there's a little more room. And we made, let's underline that. We made 1,000 cars, and that is again on our PowerPoint. We made 1,000 cars, 1,200 trucks. And that's going to give us, I guess I can go over here. Silly little line. Now we're just going to leave it alone and go down here below it because I've got the room. So we have the cost per unit is $706.50. Whoops, and 50 cents. And for trucks, no line there, buddy. Trucks, we have, well, I guess I should just tab that. We have $921,000. One way to do it is that way. And we made 1,200 trucks. So our cost per unit is $767.50. That is our service overhead per unit for each car and each truck. Now we don't have the direct materials and the direct labor for those trucks, but these are trucks and cars. But this here is our service overhead per unit. And we can go back through here. I think this is a little confusing and always confuses my students, that you have the total drivers and you have the estimated total drivers, and you want to find a percentage used. So the accounting used 10%, cars used 27%, trucks used 63%. And over here, you're not calculating any math with this, except you're finding the percentage. So 1.8 million is 60% of 3 million. And 1.2 million is 40% of 3 million. And you're just trying to figure out the percentages so that you can allocate a certain percent of the service overhead to your item, to your production department, cars and trucks. So this is actually a shorter session than we had last time, but I'm going to end it here. Oh, no, I'm not going to end it here. I need to go back to the PowerPoint just for one more little okay. So we're going to, by using actual drivers instead of budgeted drivers, we want to okay, so when you do a POHR, when you calculate a POHR and then you apply that POHR to the actual units that actual drivers that you used, it makes a more accurate cost because it avoids free riding. If you budgeted 100 hours and somebody really only used 80, they could play with that. They could be charged that extra 20 hours. They could get the money for that and they could apply that to some other job. And while that is great if that's your department, it's not an accurate costing for that job. And it reduces arguments between managers because I can guarantee you, if you're a manager and somebody says, "Well, no, we want to budget, less money for you and more money for my department for service departments," you're going to say, "Wait a minute, I don't want more service department costs budgeted to my department. I don't want more," because if you have more service department costs budgeted to your department, other people have less. They have a better, their results are going to look better than yours if you have more costs allocated to your department. So managers, you'll find that managers, they don't want the charges to their department, but they want to use the resources. And that's why using the actual drivers with your POHR or SOHR is the best way to go, because then it's just a more accurate cost representation of your production. And it reduces incentives to cut costs. So all managers want to cut costs. They do. But you need to balance that with cutting costs to the point where your employees are so taxed for their time that they're stressed out. Because the most productive employee is one who feels like they contribute to the production department. They contribute without being so stressed that they can't function. And it slows down the allocation process because you've got this overhead and you apply it to the job, to that production, and it slows down the allocation process so that all those charges aren't plowed into one department at the same time. So using the actual drivers instead of budgeted drivers is the best way to go. And now calculating full cost per unit. Now, the production cost per unit is the sum of direct materials, direct labor, and manufacturing overhead. And now this is the amount shown in inventory. All of those, because that's work in process. And this is also the amount that can be used for tax purposes. Your direct materials, direct labor, manufacturing overhead, they're inventoriable, and they can go into your income statement, and it's for tax purposes. Many companies will calculate a full cost per unit. Full cost per unit includes those service department costs. And those period costs are necessary to keep the business open because you need to pay for all of that when you sell your items so that you can cover all of your costs. And it allows for a better price estimate, and it permits companies to track all of their costs. So even though you can't use those period costs for tax purposes because those are expensed right away, you need to include those in your price because you need to cover those and keep your business going. You need to cover all your costs so you can keep your business going. So I'm going to end this here, and we're going to pick this up with another example in our next session. Thank you, and we'll see you next time.